Hello everyone, welcome to today's video. Today we're going to be talking about UK VAT. We're going to be giving an overview, and I've called this the part 1 because it's going to be followed by another video, part 2, where we're going to focus on international VAT, place of supply, and all the fun implication that comes with that. Without any further delay, let's move on to see our agenda for today's. So today we're going to be giving, as I mentioned, an overview, some fun fact. We're going to briefly go through the registration threshold requirements, the UK VAT rates, and mentioning the difference between fully exempt and partial exempt businesses for VAT purposes. Then we're going to go through some pro and cons in registering for VAT. We're going to be briefly going through the various VAT schemes, the requirement for sales invoice, purchase invoice, in order for you to claim back VAT on your purchases. And then we're going to briefly talk about making tax digital and filing for VAT. So without any further delay, again, we're going to move on to our overview. So again, let's start by mentioning what is really VAT. And this is something that sometimes creates some confusion in my experience. So VAT is not a tax that VAT registered business should suffer. It's not a tax on your business. It shouldn't be a cost to your business if you are VAT registered. VAT is simply a tax that you collect from your customers and you keep for the government, on behalf of the government, and you remit to them at the point that you file and submit your VAT return. So it shouldn't be a cost to your business if you are VAT registered. It should be simply something that you collect on behalf of the government and you hand over to them at the end of your reporting period. Very important to note. So VAT was introduced, it's been around for some time. It's been introduced in 1973 and is the third largest source of government revenue after income tax and national insurance contribution. Just worth to mention is because it's just a very important and significant tax with a lot of, they attract lots of attention from HMRC, from the government, and it's very easy to get wrong if we don't have strong system to run our business and for our bookkeeping. So the VAT registration threshold in the UK is £85,000, meaning that if your turnover in the last 12 months or in the next 30 days is not over this registration threshold, you are not obliged to register for VAT. In that case, you are simply, any VAT that you incur in your purchases will simply be a cost to your business, but you save yourself some compliance. Anyway, we're going to be discussing later the pro and cons, but if your turnover goes over the registration threshold, that at that point you have no option anymore. You must register for VAT. You must start charging your clients, your customer, VAT, and you must start filing VAT return, and so on and so on. VAT rate. So in the UK, we have 3 main VAT rates plus a 4th category being exempt. So most goods and service that we know will attract a standard rate that at the moment is 20% in the UK. And then we have the reduced rate, which is a 5%. And some example of this it will be car seats and home energy. If you notice, maybe on your energy bill, the VAT that has been charged on the bill is 5%. And then we have the zero rate, which an example of those could be books, children clothing, motorcycle, helmet, export of goods. And then last but not least, we have exempt supply, which don't attract any rate. And if your business only provides exempt supply, is not entitled to recover any VAT. And will be, and which leads me to my last point, the difference in businesses that I wanted to mention. So some businesses will provide standard, reduced, and zero rate, and we refer to those businesses as fully taxable, and they can deduct VAT on their purchases. But at the moment that your business starts making exempt supply, and it's generally for bigger businesses, then you start impairing your ability to recover VAT. If your business only provides exempt supply, you cannot recover any VAT on your purchases. If your business provides a mixture of exempt and taxable service, you can recover part of your input VAT. We're not going to go in any further detail around this on this video, but I might do another video just dedicated to this. So next, moving along, we are going to look at the pro and cons of registering for VAT. So starting with the pro. So obviously, if you're registered for VAT, you are able to recover VAT that you incur on your purchases. And what does this do? It essentially lower your the cost of your activity. Because if you purchase something that is 100 plus 20 VAT, you are able to recover the 20 and only 100 is a cost to your business. So you're lowering the cost of your activity. If you sell to registered business, it's great because they're able to recover, so it doesn't impact how competitive your prices are. It gives the impression that your business is a bit bigger because people assume that your turnover is over the registration threshold, and they just assume your business is a little bigger. And it provides some benefit when you trade internationally. It just makes it easier to deal with some country where they don't have a VAT registration threshold, and business just expect you to be VAT registered. So it just saves you some conversation if you trade internationally. And last but not least, you are able to recover some, if you are at the end of the period in a position where you spend more than you sold, you are able to get some cash back from HMRC that could potentially help your cash flow. Some of the cons, on the contrary, so there are stricter bookkeeping requirements. Obviously, you have to file quarterly. This brings some compliance costs, being your accountant, being the accounting software that you're going to use. So all in all, you got additional cost and additional burden. If you sell to consumer, which are not registered for VAT, you might not be as competitive as other businesses that are not registered for VAT, so that you could live competitiveness. But unfortunately, if your turnover goes over the threshold, you must register, and that is just unfortunate. Generally, you are in a payable position, so you need to be disciplined and put this money aside. This is generally an issue for businesses that have cash flow problem, meaning working on small margins, meaning sometimes getting paid late by clients. So this could become an issue. Which leads me to my last point, because unfortunately you have to pay the VAT regardless of whether or not your clients has paid you or not, unless you're using the cash scheme that we're going to be discussing in our next slides. So several aspects to evaluate, but I think in my experience, just one of the most important, aside for obviously the cost of compliance that you have when you VAT register, is also the impact to your cash flow. Really, really important for some businesses to maybe consider to consider the impact, but also consider using some of the schemes that we're going to be running through on our next slides. And here we are. So most businesses using the normal, what we can call the normal scheme, where you essentially, invoice your clients, you collect the VAT, and at the end of the period, you prepare the VAT return, and you deduct from the VAT that you collected from the clients any VAT that you incurred in your purchases, and you settle with HMRC the net balance essentially. So this is the normal process. Obviously, as I mentioned before, if you've invoiced a client, you must remit this VAT to HMRC at the end of the period, regardless of not the customer has paid you. So it could be a problem. So some of the schemes that you can choose to mitigate some of the issue and problem that comes with being registered for VAT, is most of the schemes are available for smaller businesses, are those that we're gonna mention now. So starting from the retail scheme, obviously you need to be a retail business, and if you sell a significant amount of low value or small quantity items to the public, which attract different rates, it allows you to calculate the VAT once at the point you prepare the return, rather than calculate it at each selling point, every time you sell an item. And it simply helps with the admin, with the administration of the VAT. Next is the VAT margin scheme, which is mostly beneficial for second-hand goods, work of art, antique and collector items, and it essentially allows you to calculate VAT on the value that you had on the goods that you resell, rather than the full value, the full sell value. Next is the VAT annual accounting scheme for businesses with turnover of less than 1.35 millions, and this essentially allows you not to file having to file the VAT quarterly, but to file one VAT return annually, but you still have to pay periodically a payment into account, not to end up with a huge balance at the end. So you have to keep somehow track, and in my experience, if you VAT register, you might as well just keep a good bookkeeping, in my experience. But you might find it beneficial. Next is the VAT cash accounting, which is certainly beneficial, as I mentioned before, to some businesses, some most businesses, especially if your customer takes a lot of time to pay you. And it's essentially, again, available for businesses with a turnover of less than 1.35 million, and essentially allows you to pay HMRC the VAT once the customer paid you, not when the invoice is issued, but once you have the cash. On the downside of this, obviously, you can only recover the VAT once you paid your suppliers. If you pay them promptly, that shouldn't be an issue. Last but not least, what I think is the most common scheme amongst small businesses and professional is the flat rate scheme for businesses with annual turnover below 150k. And essentially what it does, it allows you to work out the VAT that you owe to HMRC as a percentage of your gross turnover, which is generally which is less than the 20% than the standard rate. So how this works? You charge your clients, you send your invoice with 20% VAT, but you only give HMRC, let's say 18 or 14% of this VAT, and you keep for yourself the difference. The downside is that you are not able to recover any VAT on your input unless they are assets with value greater than £2,000. Another good point of this scheme is that you don't have to keep detailed records of your sale invoice as well as you would have, you need to do with any other scheme. So again, this is probably the most common one that I found for small businesses and professional. And this is everything in terms of schemes. Next, we're going to be looking at the requirement for your sales invoice. So if you are VAT registered, obviously you're going to have to follow some requirement when you issue sell invoice. They're not overly complicated, and generally most software they do meet all those requirements. So I'm just going to run through very, very quickly. Sequential serial number of your invoice. It doesn't matter where you start, how you start, but it has to be sequential, and it has to follow a sequence. There has to be a time of supply, a tax point, date of the invoice most of the time. The date of issue of the document, if different from the date of the invoice. Your name, address, and the VAT registration number is a must. You might issue invoice under trading name, but you must show the name and address under which you register for VAT somewhere in the document. The name of address of the person to whom you are addressing and selling the goods, a description of the goods and service you are supplying. For each description, you must provide the quantity, if relevant, and the applicable VAT rate, the gross amount of the supply, the rate of any cash discount, the total amount of VAT that is charged, which it must be in pound, in sterling, any unit price if applicable, and if you supply to a customer in the EU member state, when the supply is zero rated or exempt, your invoice must also show the reason for that and the customer VAT registration number if applicable. All these are very, very important points and are a must when you are VAT registered. Next, we're going to be looking at the requirement for the purchase invoice and the requirement in order to be able to recover VAT on our business purchases, obviously assuming that you are VAT registered. So we must follow, when we receive a purchase invoice, in order to be valid, it has to, report all the information that we mentioned for the sales invoice, of course. Is good practice to ensure that the VAT number of the supplier, especially if it's a new supplier, is a valid number. Here I'm providing a link. I will provide it also below the video, so please go and have a look, because I will provide several links actually. And so make sure that the VAT number is valid. If it's not, go back to the supplier and say, hey, it shows that your VAT number is not valid, because unfortunately there are lots of scams going around. And if you end up paying VAT to a person that is not actually VAT registered, HMRC will ask for this money back. And next is no pro forma. Unfortunately, if you've been given a pro forma invoice, you must chase and ask for a final invoice, because you won't be able to claim against a pro forma invoice. Very important, we must keep a readable copy of the invoice on paper or digital. We can't simply have a bank statement and show that we purchased, something at a petrol station or somewhere, and then say, okay, this was subject to X amount percent VAT. No, we must have a copy of the invoice, and we must be able to produce this to HMRC at the moment that we are asked to do so. Without a copy of a valid VAT invoice, so showing all the information that we mentioned for the sales, we are not able to recover VAT on the purchase. And finally, the purchase must be, and this is, most businesses will meet this requirement, must be business purchase, obviously, and must be related to a supply of a goods or service which is subject to standard, reduced, or zero rate. If the supply is outside of the scope of UK VAT, but it would have been within the scope and subject to a standard rate if it was made within the UK, or if the supply of service you make to a person who belongs outside of the UK. Essentially, it cannot be a purchase related to the supply of an exempt an exempt supplier, related to an exempt supply. So these are few points, but are crucial, very, very important. And if we don't have a valid VAT invoice, unfortunately, we are not entitled to claim the VAT back. In terms of import VAT, we're going to be discussing it on the part 2 when we're going to be going through international VAT and trading internationally. For now, this is everything in terms of recovering VAT. Next and last, I believe, we're going to be briefly talking about making tax digital. So you probably heard this term to death and is now fully implemented, meaning that if your business is VAT registered, it must comply with making tax digital, and it should be registered for that. If not, HMRC has gone through a process of registering any other businesses that should have been registered. So if you're not already registered, you will be very soon. You should now keep, what does this mean to businesses? You should now keep digital records, and you should submit VAT return with compatible software. So if you're using an accounting software like Xero, like QuickBook, or whatever, any other accounting software that allows you to file VAT return with HMRC, most of the software are compatible with making tax digital. If, for example, your business have different source of you use different software to invoice, and you need to merge and manipulate the data, you can still do so. You can still use Excel, but if you do so, obviously any work done in Excel must be done through digital links. So what does that mean? That you can't copy and paste a number across your spreadsheet, but you need to link them with formula and equal and with formula, essentially. We're going to discuss this in more detail on another video just focused on this. So you will be doing this, and you're still able to use bridging software in order to file. So at the moment, many people ask, are all this information, transmitted to HMRC? No, not at this moment. At this moment, HMRC, at the time of the submission, only receive your box, your standard VAT return, the various boxes. But it will, but if they audit, they expect you to have a file which is all digitally linked and meets the making tax digital requirement. It might be things might develop in future that will transmit more information, but at this point in time, when we press submit, we only submitting the boxes of the return. And this is really everything about making tax digital and everything for today. I hope you really enjoyed the video. I hope you found it useful. If you did, please don't forget to like and subscribe for more video. Again, the part 2 is coming out, so look out for that, and many more videos are coming out. So thank you very much for watching, and again, don't forget to like and subscribe. Thanks again.